So right now we are standing on 20 March 2026. The closing price is 23,115. So it was a tough time or tough day for the market on Thursday as well as on Friday. I think on Thursday itself the market was struggling to catch 23,000 level, right? And there was a short recovery in case of Friday, right? So it's kind of a short recovery, but not so strong recovery that has happened. And since we discussed last week also, the momentum on the downside is very strong. So as you can see, the ADX, right? So ADX is trending towards the negative directional index. So from the level of 16, right, you can see that it has risen up to 39 and it's continuously rising, which means that the negative directional momentum in the market is quite strong and it's not subsiding, right? We'll have to see if that subsides or not. But as of now, you can see that it kind of bottomed on Thursday. The negative directional index kind of topped around 49. We'll have to see if it stays below 49 or it crosses over 49 or not, right? The RSI is also intact around 30, which is kind of equilibrium. And I would not say it's kind of very weak. Very weak would be obviously between 15 to 20, and that's kind of a very bad scenario that the market would be in. But right now, 30 is kind of equilibrium. Next is distribution days, right? So the distribution day count right now is standing around 8, right? 8 is a very large number, right? So this number has expanded massively from the number of 2, right? It was 2 actually a few weeks prior, right? So right now it's standing around 8. It is a 4 times increase in the number of distribution day count. And the market has broken below all the moving averages, and we can see that it's hanging below everything. So this number is still bad, right? This is bad. This is bad. Now we spoke about this thing last week, right? That in the case of carnage, the index or the market has to lose all its moving averages, right? And here we can see that it started with losing one, right? So you can see here it lost one short-term moving average. That is in January 2026, the market lost one moving average. And beyond that, I'll just move forward and I'll show you on 9th March, the market lost the second moving average, right? This is 9th of March. And then on 16th March, the market lost its last moving average, right? So it has lost all its moving average and there is no support across, right? So these were the three places where one might see that okay, this is going to be really very bad, and then market is falling into a deep terrain, right? So that is what we can see. But the worst part right now, okay, the worst part is the India VIX. So India VIX was very much settled around 12.2 or something. We were very comfortable in Feb, second week of Feb or third week of Feb, you can say. But in times going forward, right, what we have seen is the VIX has increased to the levels beyond 20, and it is trying to sustain beyond that, right? So basically, what happens? The carnage happens, the breakdown happens, India VIX increases massively, and then it reduces back below 20, right? But right now, what we can see is it is sustaining above 2020, right? So it is around 2022 continuously, which means that the market is anticipating something. Something is going to happen big time, and we as the market participants, we don't know as of now, right? So either ways, either the India VIX, that is the volatility index, has to subside below the level of 20 and things has to cool down and it has to subside below that. And then we can say, okay, things are going to improve, right? Then we can try to find a bottoms and stuff. But right now, what we are seeing is India VIX is confidently standing above the level of 20 and it is standing around 22. So there is a higher possibility, right? That we can cross above 25, even 30, 35, right? Whatever that has happened during the COVID, right? So during COVID, we crossed even 40, 45. That was the scenario. It was very, very bad, right? A very bad carnage in a short period of time. Next bad thing is we don't have a swing signal, right? The market is in a continuously falling mode, right? So we don't have a swing signal, so we are doing nothing. So that thing is like stagnant. Like we don't have a swing strategy in play right now. So we just have to sit on our hands and then wait for the right formation to happen. We are waiting. Next is the number of stocks in stage two. So this is the bad number actually. So every time that when we speak, right? So there are 3,000 plus stocks in the NSE database. but not even 2.5%, right? Not even 2.5% stocks are in stage two, right? So this is a bad scenario. And in this scenario, one thing I can say is this is not the actual bottom, right? So whatever bottoms that I have seen in the past that happened was around the levels of 10, 20, or even around 25, right? It should be less than 1% of the market. So when you see less than 1% of the stocks in the market being in stage two, that then we can say, okay, things are really very bad. Either the stocks are in stage three or stage four or stage one, but they are not in stage two. So most of the stocks in the market are not in stage two. That is the scenario. But when the bottom happens, that happens when the number of stocks are very low, even in single digit, right? So during COVID times, I had seen those levels of or six stocks in the market which was in stage two. That was very, very bad, right? Next is we'll move to the right hand side. I'll not discuss everything. I'll just point the inferences, and the another bad indicator is this one. The number of stocks which are making new 52-week lows are much higher than the number of stocks making new 52-week highs, right? This is a very bad scenario, and the 10-day moving average is absolute bad, right? This is a very bad scenario to be in, right? Kind of very close to big time mayhem that we are seeing right now. And as we discussed last week, for an absolute bottom to happen, we'll have to find out the percentage of these stocks in under these categories. These all have to be in single digits, right? Most probably that is the bottom, right? But we have seen a short rebound. So the number of stocks moving out 10 DMA is kind of rebounding. The number of stocks above 21 is rebounding, right? So we have seen a short rebound that we have seen right this week. But I believe this is not actually sustainable. We'll have to see some more bad phases coming down the line, and then we can say with higher confidence that okay, things are really bad and we can't go further worse from here, but that has not happened yet, right? So this was section two where we discussed about the indicators, and we discussed about this dashboard where we can see how stocks are behaving underneath the market, right? What is the sense of the market below the indices, right? So this is what we have seen.